This was not in the original agenda, but knowing Sanjay, the one good part about it, no, ChatGPT will not tell me this. This is my friendship with him. Every time you meet him, he'll challenge you to think differently. He'll challenge you to do something new. And, I think most of the times I have failed that expectation of his. But yeah, it's invigorating to meet Sanjay. This topic is his brainchild. It's his passion. And Sanjay strongly believes that the world has already changed. It's not changing. The world of taxes has changed and changed decisively. Hopefully for the better, Sanjay. We want to hear from you on this. On that note, I invite the panelists. Wait, I want to read Sanjay's profile, but it's not showing up. I don't know why. The new world of responsible and automated taxes. Let's welcome the panelists one by one. Sanjay, the moderator. Sanjay, please. A big hand for Sanjay Tolia. Head of Tax at PwC India. Ms. Indira Anand, Group Tax Head of Tata Sons. Madam, a pleasure to be hosting you, please. Mr. Mohammad Harun Qureshi, SVP and Head of Tax Asia Pacific Genpact. Again, a pleasure, Qureshi Saab, to have you here. Ms. Nisha Gupta, Director Global Transfer Pricing, Honeywell. Nisha, once again, a pleasure to host you. Sanjay, here goes your profile. No, there is nothing controversial, luckily. I was searching for it. With over 25 years of experience in the field of taxation, Mr. Tolia is one of the most respected tax professionals in India. He has been associated with PwC for more than 2 decades and has played a key role in shaping the firm's tax practice in India. Sanjay has extensive experience in advising multinational and domestic companies on various tax matters, including inbound and outbound investments and tax structuring. He's also been involved in several high-profile tax litigation cases and has also represented clients before various forums. He's a member of several prestigious bodies, and he's a speaker at various tax conferences and seminars, and is widely regarded as a thought leader in the tax space. How many marks, Sanjay, would you give ChatGPT for that? Thank you. Yeah, that's working. Sanjay, all over to you.
Thank you. So kind of you, Arun. I don't know whether I deserve that, but thank you so much. It's been a privilege to be back at this conclave. We're doing this after 3 years, Arun? Maybe 2019 was the last one, yeah. So when I was hearing Delhi, I just thought that one who could solve that problem could be Shakuntala Devi or Ramanujam or technology. And we'll talk about that today. So I'm just going to do a little overview on the theme, what we want to talk about. And then we have an esteemed panel, and I have this privilege to do that moderation, so we'll get into that soon. So responsible tax and technology. Both stand on their own feet, and they are interconnected. But let me start the journey by talking about trust. And someone asked me, how do you define trust? And I was wondering, and it just came impromptu to me at that point of time. And the example that came to me was Google. And I asked that person, what do you do to find a destination? And he said that I use Google. And I said, why do you use Google all the time? And he said that it always reaches me to my destination all the time. And I think that belief in Google, over and over, consistently, is how you build the trust. So why is this so important today? So if you look at organizations around the world, they have come to realize that there is a huge amount of stakeholder expectation. And stakeholders are not just customers, but it is also your employees, it is employees' family, it is suppliers, it's regulators. The whole society around us has a huge amount of expectation. And what is that expectation? That as an organization, you are obviously therefore making profits. You didn't build an organization to Because if you wanted to do just societal work, you could have done an NGO. So business is for profits. That's how we learned in commerce. But today the definition of business has changed. Business for profits while doing good for the society. And that is the stakeholder expectation. So we did a survey globally in PwC, and 92% to 94% of people who were business heads, employees, customers in their capacity said that organizations which cannot be trusted will not survive. Organizations which are trusted will make better top line and better bottom line. That's the broad theme. Now, if you see under this theme, what has come today, and we all talk about it all the time, is ESG, environment, social, and governance. A lot of work, a lot of stuff happening around climate. When you talk about ESG, it is broadly skewed towards E. Look at Delhi. It's so cold in May. Look at the way the climate change is happening. And I think everyone will have to do their bit to be there. So if you look at S, which is social, tax fits there. Tax is one of the biggest social contribution. And when you look at tax, the theme of today, what we wanted to talk about was responsible tax. And why we talk about responsible tax? And I want to give you another perspective there, that if you look at ESG and organizations talking about net zero commitments. Now, net zero commitments is something that you will achieve over 2030 and 2050. And some companies are taking 2060. How would you provide a confidence to stakeholders that we will actually achieve net zero by 2030, 2060? Because it's just a commitment. And you will have to go to that path. But if you look at tax, it's a great litmus test to show that I am the company which will actually achieve the net zero. Because tax, you can be a responsible taxpayer, and I'm not saying we are not, but we can be more, and show that immediately today and say that if we are able to do this today as part of our ESG journey, we could easily achieve our net zero commitment also. So we'll hear more about responsible tax and how it helps in building trust with stakeholders. Part 1. Part 2, technology. I remember 1998, I joined, it's almost 25 years now. I'll actually complete 25 years in PwC tomorrow. I used to fill the advanced tax challan and the self-assessment challan by hand. I've written the 3 times you will have to write the names and all that stuff. Look from there where we have come. I don't need to talk about that. And the latest part about technology is ChatGPT. Arun actually went to ChatGPT to ask that what is Sanjay Tolia's profile. And I'm sure ChatGPT gave you what it gave you. So we'll talk more about that what is technology doing today, why it is important. And then coming to the last part, which is about how technology will help us also achieve our agenda around responsible tax and trust. So with that, I'm going to go to the panel and start the conversation. So thank you, Indra, Qureshi, and Nisha. I'm sure, and you're going to get 3 different perspectives: a Genpact, Honeywell, and Tata. Can you hear me? Hello? So let me start with you, Nisha. What does responsible tax mean to you and your organization? And how is increased transparency helping the cause?
So, Sanjay, I would say that a couple of years back, every organization was spending time automating the data. Now, whether we did it ourselves or we were forced to do it, then came in India GST, and world over you see a lot of organization. You had no choice but to automate. Now it's the time that you translate that data to the right analytics using technology tools. Dali rightly mentioned that Pillar 1, Pillar 2, DAX 6, multiple reportings are there. Same organization has to report under different legislations. So we as tax organizations have to be responsible for right reportings and responsible reportings, right? At the end of the day, when you are giving your shareholders the value for their money, tax is a contributor to that. So very important aspects to it is that we do the right reporting, trustworthy reporting, because everything starts with trust. Your CFOs, your C-suite, or to your shareholders trust what you are doing. The regulators are trusting you with what you report, right? So today we are at a stage where you have to use technology to get you the best analytics, and that's where your people start using that technology to report out. So that's where I see as a journey from automation to technology to the right analytics to be doing the right reportings. If you as tax heads of your organization is not investing on tax transformation, I would urge you to do that. I can tell you today morning when I woke up at 6:30, my boss had given me a mail saying that, look, we have a review 2 weeks from now. I want to cut every agenda. I don't want to talk about transactions. I just want to talk about transformation and transfer pricing. So that is what that's what the talk is about at the stakeholder level or at the board level today. That what is that data giving you insights?
Interesting. Qureshi, let me come to you. Having heard Nisha, I remember 2015, and just before that, UK Parliament got the top 100 companies into their office and asked them about their tax policy. And long story short, Starbucks paid 20 million pounds as taxes, which in the world of tax was known as moral taxes. Would you help distinguishing moral taxes and responsible tax? Is there a difference or it's the same?
So, Sanjay, I think let's first talk about responsible tax, because I think moral tax is a little tricky in my view. And responsible tax definitely is a fair ask, and that's what now, at least for the last 10 years, if you see, whether globally or in India, that's what everyone is really working towards. And since you gave the example of UK, I think UK actually now has made it mandatory for taxpayers more than 200 million pound revenue to actually publish a tax strategy document on the HMRC website. So I think clearly, and Australia is doing its own thing. I think India does not have any formal rules, but I think it's a matter of time. So I think now clearly the culture is and has to be, I think, that you have to comply with the law in letter and spirit. In substance is definitely now more important than form. It is no longer that you do transactions or set up structures which good look on paper. They have to good look from a business perspective also. Because I don't think anyone really wants to carry the reputational risk of non-compliance or some big tax adjustment happening. I mean, tax adjustments can happen, but not a tax adjustment for the wrong reasons, because you missed out something. Now, coming to moral tax, I think that is more debatable. I think ultimately taxes have to be paid based on economic principles and the law of the land. I don't think we can really say And maybe there is some overlap also. I mean, ultimately, we are talking of ethics and we are talking of, when we talk of responsible tax, we are talking of, in a way, we are talking of ethics and good practices, which is fine. So to some extent, there is some overlap also. But I don't think really that you should weigh the moral rights and wrongs while calculating your taxes. You really have to do the right thing, not necessarily what is morally right or wrong. That's my personal view.
Fair. So let me just double click there, Qureshi. Again, 2015, BEPS came out. There were two clear objectives of BEPS. One was to avoid double non-taxation, and the second one was about taxes should be paid in the country in which value is created. Would you want to elaborate on that, what probably BEPS meant, and how do you connect it with responsible tax?
Yes, Sanjay, actually, whatever BEPS has done, and globally whatever countries are now doing, really it's all in the same direction. Now, some countries may be taking some unilateral steps and sort of doing their own thing also, but I think directionally, it's really pushing in the same direction of, I think clearly whether we look at the earlier action plans or we look at now the pillar 1 and the pillar 2, clearly the focus is to avoid double non-taxation, to avoid double deduction of expenses, to really avoid shell companies in low tax jurisdictions. So that's what really everyone is working towards. The pace may be different for different countries. On, I think, value creation, I think if you really look at now the latest developments or the guidance on that, the fact that importance is for the first time being given to markets as against just residents and source countries, I think that's a very important pointer in that direction. And I think, obviously, you need very robust transfer pricing policies because it's really a paradigm shift which is happening. You really have to document things very clearly for posterity because these things will get picked up, these things will get questioned in times to come.
Fair. So Indra, coming to you, and this is a very, feeling very proud to ask this question to Tata. So how does it all come together? I know the first report from Tata was the Tata Steel Tax Transparency Report. What does it try to achieve and how does it all come together?
So I think at Tata's, it's always been the fairness to tax. It was always there, even before, much before it could be regulated. It's synced in our code of conduct, which all companies of the group adhere to. And the fair tax, since it's something so intricately interwoven in the genes, now coming up with the EU reporting requirements, there was little doubt that we would have led this as well. And it was a journey to just formulate what we always did. So I perhaps believe that it is now documenting, which was always there, scattered all over. So you're now putting into place. All companies do that reporting somewhere or the other. You're supposed to pay taxes. You're supposed to today assimilate that under one report to show what you've been doing under this ESG module. So tax transparency report, which is now done by TSL. We have other companies. We have JLR. We have TCS also doing tax strategy reports. So though not mandated, but they are getting there. So JLR, of course, they need to do it. TCS has picked up that too. So sooner, I think we'll see all of other companies joining this to give a report where your stakeholders at one go can see as to what are the initiatives which you have taken. So towards the tax, basically, we're talking today about the social part of the ESG, the tax. So this is now getting consolidated in one report here.
And do you see the board of directors changing their view about taxes? 10 years back, what the board had a perspective on taxes, and you just heard Qureshi talk about and Nisha talk about tax being more reputation than just compliance. So have you seen the change in the board, the way it talks about taxes in the board meetings?
The tax has gone more dynamic, and the the numbers, with all the numbers just scaling up, it's become a matter of concern. It was always important, but it has just got to the forefront a little more because of the sheer publicity which this gets nowadays, because tax is something which all are very, very concerned with. So the importance has increased, I should say, but it was always there, just that it's added a bit. Yeah.
Thank you. Qureshi, if I can come back, so we heard a lot, responsible tax, it's more a mindset also. It's a culture of the organization. In your 30 years, you've been playing this role on Asia Pac. How would you advise the audience in terms of how does the journey start in the organization, and how do you really go to that level and probably feel comfortable that, yeah, I'm actually doing my responsibility well and I am a responsible taxpayer?
So I think, and just to supplement what Indra said, and then we'll just take this forward. So I think boards are increasingly focused on risk management, including risk management in the tax function. So I think that is a very important part of the whole review process which happens with boards. And I'm not talking about just the Indian board, but at a global level, with all these developments happening in OECD and everything, boards are pretty much focused on this. So to some extent, and to answer your question, a lot of this also then trickles down into the organization. Because if there is a focus at that level, then while we as the ground level tax professionals were always focused on this, but now there is increased impetus, because now actually within the company, so the tax authorities were always looking at us. Now within our company, there are very senior level stakeholders who are actually monitoring what is happening, because no one really wants to be on the wrong side of law. So I think that is really also helping develop a culture in any organization, that you not only have to comply with the law, you also have to do the right things. I think, and the other thing which increasingly now organizations are realizing, and not just in the tax function, but even in a larger world, that your structures cannot be set up just for tax considerations. There has to be commercial considerations, there have to be a business involvement in things. So I think that is the other thing which people are looking at. And clearly the expectation is that you have to manage your taxes, definitely. You have to manage your ETR, definitely. But without surprises. I mean, don't do something which blows up later on.
Interesting. So I just want to share with you one experience. So many years back, so one of my clients showed me a document, and he said that this is what we have to fill internally when a new business initiative is taken. There are 5 questions. The first 4 were all around how will it be treated as what's the interpretation of law? How will it look in the media if it comes up, even if it's the right interpretation of the law? And what's the view around councils, etc.? And there was one more question, but the last one was a very interesting one. The last question was, would you be able to sleep? And this was formally in that document. And then the head of tax and the business had to sign, and then the business could go forward. So I couldn't ask for anything better on this topic on responsible tax. If you are able to sleep peacefully in night, I think that answers the question. Okay, so let's move to the second limb. We'll start with the storyteller. Nisha, some of you know her. She's a great storyteller. So I couldn't ask this question to anyone else, but I wanted to start with her. So Nisha, explain to us, what do you think is technology? We talk about automation and there are so many words used, but what is technology and what do you mean by that?
Okay, I'll tell you what I think of technology. Technology can be a very big word or a very small word. For me, what is technology is getting the analytics, what you desire from your automated systems using any tool. It could be, using Alteryx to a Tableau dashboards to a Power BI. Today, none of your stakeholders would want to go through millions of lines of transactions or data points. Look at it if you're Indra's here, so she's got billions of dollars of business, right? Can she go through so much of data? No, she cannot, right? But that data stored in a tool, let's call it an ERP tool, what technology she should use to get to a right dashboard which is visually strong and gives her analytics and triggers her mind to a planning. I'll give you my own example. When I took over the role of global transfer pricing, our CPCR could be a 1,500 rows to a multiple lines spreadsheet. I said, this is not what I can give myself to review, because every row and every column has a number. What does it give to me? Nothing. Zero. And at some point of time, your mind stops reading numbers. What do? I told my team, I'm not going to do this. I took 5 days in 2019 to read that Excel and come to nothing. I said, this is not happening. And I went and told my boss, 2 months in the role, I can't do anything because it's too short a time. I said, next year, I promise you I'll do something. I created a Tableau dashboard. My 1 week job for me was 2 days affair. And for my boss, it was 2 hours. And today, it's half hour. So that is the role of a tech tool. So I'm saying technology can mean a lot, but what is that tool that you will use which will give you an end product which gives you the right analytics? Where as maker, checker, reviewer, everybody gets satisfied from the output and ultimately goes out to a regulator. And that's where fair reporting, responsible reporting, governance, every standard gets met. It's a complex world, guys. So I would say that think about it, that how do you use technology to your best? ChatGPT or any of your tools are tools. Your teams, your people, or your assets, use them intelligently, use them efficiently. I learned it on my job, but I would encourage you to all invest in that. Today, when a role opens in my team, I would tell my boss, I said, I need a technology expert, not a tax expert.
Fantastic. And tell me, pillar 2, will you need more of technology to support?
Yes, you will need tools because your systems have the data, right? Your data, you will not create more data. Data is already there. We talked about 122 data points. Where is Arun? Arun, I could remember 122. Okay, by the time 7 o'clock, I remember or not, but right now, so I deserve a prize. So you have 122 data points. You've got every country will come with own regulations of information reports, but it's the same data, right? So you have to use the right tool. You have to do brainstorming within your team, with your advisors, or with your IT organization. That what is that technology or tool? You know the starting point, you know the end point. Now you have to pave the road between it. Because it's the same data now requires to be reported as part of pillar 2, some part of data goes up to your CBCR, some part goes to in your tax return, some goes into your transfer pricing documentation, but it's the same data. Data will never change. You cannot change the data. But how you synthesize to create reports out of the data is what is needed today, and that's the maturity of your organization. So that's where I see the use of technology.
Perfect. Thanks. Indra, let me come to you. You've been always a corporate tax person, but of late you told me that you've become more GST. And I can imagine the challenges. And GST is the best example of end-to-end technology, right? It starts from the from the taxpayer and it ends with the government and it's all technology all the way. So what were the impediments and how did technology solve it? Maybe a little journey on your journey about this GST would be really helpful to learn.
So with GST, really what we saw, let's break it into two. There is something which is interpretative. So there are some calls which you need to answer based on interpretation. And the rest, the other bucket of it would be largely how you handle your data. So they ask you transaction level details, which runs into thousands of lines. And the way your system would record it would be very different from the way they require it. So they have analytical tools, they come to certain reports. You have your set of data. You just need to enable it to satisfy those kind of reports. You need to generate what they require. Just as what we discussed with Nisha right now, that the reporting has changed. This reporting was always different from the department side and from our side. It was always there. We see CBCR to be a new journey, and now with Pillar 2, yet another level of getting a new kind of report. This data with the GST authorities, it has been that they extensively have used technology to leverage the kind of questions they now put to the assessees. And sooner or later, if nobody, you do not adopt to this kind of technology, you will not be able to reply. It's really an online, real-time basis invoice detailing which they have. They get into analytical, and you need to satisfy those. Maybe now reconcile and keep them ready at your level. You need to understand how they are working. That just helps resolve and meet their queries within a short span of time. It's just the sheer data size which takes us time at times to reply to those queries. As far as interpretation is concerned, I think that chasm will always remain because though we're talking about fair taxes, yes, we believe this is fair. There's an interpretation, there's a perceptive change when the department looks at it. So that kind of litigation is here. It will stay always, I think, until such time people think about this, the department thinks about it in one manner, and you think, unless that you get to a regime where APAs and etc. have tax certainty to that level that it easily gets resolved, and therefore we are moving towards that. Today, as we see technology, we are filing e-returns, we have faceless assessments, things are changing. And sooner, and you get confined to certain issues which only lie before them for litigation. But GST is a new law, and we've seen a lot of interpretational issues arising, and this is just the beginning. I hope there's more clarity. And one more thing which I would like to put across this platform is that multiplicity of such interpretations coming up with GST from various pan-India. So you will have queries with DGGIs asking you from all corners of India. So, that gets to multiplicity. Somewhere department should use technology to unify this approach, and let's put to the assessee a one single, issue-wise, one DGGI. So we are hoping that this gets resolved at some angle. Otherwise, this is where we are today with the GST and technology. Yeah.
No, fair point. I think Nida, you make a very important point in terms of how tax department should use technology, and I'm going to talk about that. But I think when I spoke about trust, as organizations need to build trust with their stakeholders, I think it's important for the tax authorities to build trust with taxpayers. And they can actually use technology to achieve that. But let me talk about, Qureshi, coming to you. Tax authorities are actually using technology. We've seen that the GST authorities have used a lot of analytic tools on the value chain because they have the whole supply chain and probably got around 1 lakh crore more over the last year. There's a project Insight, which is a technology plan of the income tax department. We had a very interesting case of Hardik Pandya, which was all in public, right? That he purchased a watch in Dubai. He comes to the Mumbai airport, and the customs authorities catch him because he had asked for some refund there, and the data was already available with the tax department. And a huge amount of exchange of information is happening in the world of tax. So I see that the tax authorities around the world have embraced technology, if not more, at least at the level at which taxpayers have done. What do you see as a taxpayer, and again coming from your Asia Pac role, and what more should be done by taxpayers, keeping in view that this is where technology is taking us?
So exchange of information was always happening under the various treaties. I think it got formalized in the last few years, and it got much more institutionalized and, as you are saying now, technology-driven, with this whole master file and CBCR being documented and being available to everyone. I think it's got much more formalized now. I think the important thing that we have to remember, it is not only exchange of information between different governments, it is exchange of information between different arms of, for example, the same government. For example, even within the Indian government, there's so much of exchange of information which happens between the income tax, GST, the customs department, Reserve Bank, corporate affairs ministry. Same information is being shared around, and therefore, as a corporate, as a taxpayer, we really have to really think through what kind of technology we use, that consistent reports come out for different purposes. Now, while the purposes may be different for different rules, but it's ultimately the same base data which is feeding into everything. So we have to make sure, because at least in the past we had this challenge of different reports pulling out different kind of results. I think that clearly needs to be avoided. It unnecessarily creates wrong impressions about the company. So that's something we have to use technology, and I'm sure we are using now. Because one thing we have to keep in mind, that if we are filing a GST return, it will definitely be used by at least 2 or 3 other regulators, or it can be used or audited by different regulators. So we have to take a very holistic view of what kind of reports we are pulling out from our systems.
So are you saying that one should fear because the government is interconnected and they have more information, or are you saying one should be better prepared?
We should be better prepared. There's nothing to fear, really. Look, even earlier when we were not so prepared, I don't think people were doing things wrong. It's just that they were not very mindful of sometimes really what kind of data was going into which report. I think the data is the same. We have to be better prepared. Our technology has to be really geared up for this. So I don't think there's anything to really fear about, but definitely we have to be more cautious. We have to be more mindful of what we are doing.
I think earlier the departments were not talking to each other, and there was little communication there. The exchange was little there. So as things are picking up at the other end, we are mindful that we also need to keep pace on that, rather keep ahead of times.
Perfect. No, I was told, Anisha, you said this, right, that the transpricing reports are being called by the customs authorities. And I would say, why not? And why not use the transpricing documentation to get the customs report also? Maybe you want to share your perspective?
Yeah, so in India, we see that there is a formal agreement between transfer pricing wing and the, both part of Ministry of Finance, CBIC, to share information. As part of my global transfer pricing, I see it, world is converging to this. The customs authorities, when they do, audits on you, they first and ask, what's your transfer pricing policy? And what's your transfer pricing documentation? And some jurisdictions I've seen saying that, let's say goods started from Indonesia, moved to Singapore. From Singapore, they went to Germany. From Germany, they went to some other country. The customs, let's say, at the end, let's say hypothetically, they land up in Turkey. They say, what did you start? What documentation do you do when you started or goods from Indonesia? So, right, as I said, data is same across your company. You cannot change the data. Now, we have to be mindful that the data is accurately captured in the system, so that when you draw out reports, it gives you meaningful answers and the rightful answers that are required for reporting. So we have to, Qureshi said, Indra said, the data is same. We were not mindful of it. We were not seeing that, okay, what your payables team is doing or what your HR is doing with salary payments or to what your customer data is saying. All this have to be converged in a manner that it is reported accurately, and then eventually it gives you the right analytics, which could be a GST, which could be customs, which is transfer pricing, which is DAX6, any kind of it. So that's how it's important. And the moment you have that accurate data, you will start to develop trust your own self, and that trust you exuberate to your stakeholders. Because as a tax department person within your organization, you will trust that data. And with that same conviction, I can go up and tell the stakeholders, which could be your CEO, your CFO, or to your shareholder, and ultimately to the regulators, which could be tax department, customs, or anybody, that this is what the data is all about. It's time that we transform the way we see data. So tax transformation is something that we should be investing on mindfully. Limited resources, maximum results is what you should be thinking of.
Oh. So just a tip for the audience. If you have got APA signed, okay, an advance pricing agreement for goods, import of goods, unilateral, bilateral, use that to get the government, go to customs and get the advance ruling of customs using the same APA. Left arm of the government will have to accept the right arm. So something one could use. Qureshi, if I can come to you, most of the people in this audience would want to embrace technology. When you talk technology, there is this question in the mind that is it the role of the CIO? Is it the role of the CFO? And is there a head of tax role in this? More often than not, we see that the head of taxes will end up doing most of the stuff, despite having the best ERP in the company, working on Excel. So what is the challenge? And I'm going with your experience because you do this for even your clients as Genpact. So what are the impediments and what's the answer to that? How does one, as a head of tax, pass through this challenge in the organization and ensure that they get their pound of flesh?
I think, Sanjay, honestly, I think budgets are often a constraint. So while I think, with due respect, I think the government has actually invested a lot in technology in the last few years. I don't think businesses have really kept up at that pace because businesses are more focused on running their businesses, really. So even for a tax function or a finance function to really focus people's energies and budgets on a particular project, it cannot be just a tax project or a finance project. You will have to create business awareness. You will have to really make it a business level impact. For a prime example is GST. I mean, GST could never have been implemented as a pure tax project. It was cutting across your tax, your sourcing, your customers, and that's how it got implemented. So that's how, I think that's the kind of awareness you really need to create to often get past this, there are limited resources, what all do we invest in? So I think you have to really create that awareness, and the tax team and the finance team really need to partner with the businesses and to really get something out of the pie.
Fair. I don't know whether adding this cost to the total tax, increasing the effective tax rate by a little bit, and probably could be the answer. But okay, let me bring some fun in this conversation. It was fun till now, but a little more. So this is a googly question for all of you. I have not prepared you for this. So what do you think ChatGPT will do to our lives in the world of tax. We'll start with Nisha and then Indra and then Qureshi.
Okay, so according to me, ChatGPT is something, an unknown devil, is what you think in your minds, whether we believe it or not, but your subconscious thinks that ChatGPT is something which will disrupt your life or will do something which is not what you want to do. But I would say that it's reality, and use it as a resource, and use it intelligently as a resource to your betterment rather than to your detriment. Right? So use all technology tools or any of the tools intelligently to your benefit rather than that tool comes and eats you or bites you in a wrong manner. I would say, I tell my team members, I said that, so everybody of my team members come cribbing to me every day that this data is not available, that data is not available, what do we do? I said, guys, you cannot change the organization in 1 day, 2 day, 5 day. You guys have to go up and have a thinking hat that what tool you use which is cost friendly and efficient to get you what you need as a data. Rather than for everything and anything, you can't create big projects and go up and run to a CFO that I need money. No. We all have to start thinking that what are those easy, good tools that are available, use it intelligently so that that tool helps you to draw up the data and gets you to your reportings.
So I think ChatGPT, we are irreplaceable kind of species, and certainly can come to our aid, but will not be able to replace the kind of complexities tax accounts deal with. So I still have hope that we will be one up there, but certainly they can help us out in our problem solvings.
I'm glad you said you have hope, because based on your hope, we survive. So.
Yeah, so I think, I don't think there is any need to be apprehensive of ChatGPT. I think it's a resource, as Nisha and Indra said. We should proactively use it actually. We should actually use it proactively. We should train our teams to use it, and we should see what good comes out of it. Maybe it will help, and maybe, Sanjay, on a lighter note, it will reduce reliance on advisors. But so be it. We should definitely and proactively use it.
I totally agree with you. So one of my junior team member, he just came to me and he said, I asked ChatGPT, give me comparables for pharma manufacturing. And it actually gave all the 10 comparables. So 8 comparable missing tha from Pravas and Kaplan. So it said, Sanjay, the clients can easily get these comparables from there. I said, then let's use it ourselves also, no? We can also use it and make our comparable study maybe better. So I totally agree with the panel that it will actually make our life more better, and why not leverage and go for better things. Just one more point. You heard the panel. I think one of the challenge, you've seen teams sitting outside. We have our tax technology team there. The challenge I've given to them is that there are 2 ways to look at technology. One is to build these small transactional tools, which also is required, right? You will need to do a withholding tax reconciliation tool. You will need to have an ASP, an e-way bill, an e-invoice. But there is so much required for compliance, for reporting, and at the time of assessment, which actually comes from the ERP system, which we still do outside in Excel. How can we ensure that most of the stuff can be actually obtained from ERP directly? Should be the journey of tax technology, and we'll see where it goes. But that challenge is already there with the team. Taking forward, maybe I'll ask one of you, Qureshi, let me go to you. Do you see that there is this marriage between technology and responsible tax, having discussed both the topics?
So definitely, I think technology will definitely play a role, and should play a role actually, in making our life easier, in helping us really come out with the right data and prepare the right returns. And actually, in the longer run, it should actually free up our time so that we can really focus on the more value-added stuff and really sort of outsource the basic stuff to technology. I think it is really time that we need to do better things rather than just struggling with our returns and our assessments. And I mean, if we have more time, we can think of how we actually make our returns better and not just more accurate. And I think that's what technology will help us, and we should definitely leverage that.
Perfect. Fantastic. Okay, so shifting gears, Indra, I'm going to come to you especially. And this is more about, just as a background for audience, you've heard about the carbon tax. And I was just talking to the panel when we were preparing that we moved from source, residence, market, and now it's carbon tax. And you'll have new taxes keep coming as the economy will require globally. So EU has come out with this CBAM, which is the Carbon Border Adjustment Mechanism, which is the carbon tax. What it says is that countries which are not part of emission trading system, where carbon trading will happen, will have to pay extra tax based on their carbon emissions. So from October 23 to December 25, such companies which are not part of this emission trading system will have to disclose their carbon emissions to EU, based on which tax will start being levied from 1st January 26. This is a big one, okay, and it can actually increase your cost significantly. So what I read about cement companies would be that if they are not, if cement is coming from a country, let's say India is not part of the emission trading system, cement cost could go up by 90%. So just imagine the cost. So the question for you, Indra, is, and Tata as a group supplies so many things. It's going to cover iron and steel, aluminum, cement, etc. So as a group, you supply a lot of stuff to EU. I'm sure this is something which you as an organization is thinking about. But what I wanted to get your perspective in, how are you dealing with this as a tax from a compliance standpoint? And to get your perspective in terms of what is the role a tax head can play with business to deal with such a big issue. It's not about just compliance, but it's also about partnering with business. Maybe both the perspectives will be very, very useful for the audience.
So as you rightly mentioned, the EU's already coded this, and steel, for that matter, has already started the reporting. We can see to get to the net zero positions, which may take a while. But before that, also looking into researching and various mechanisms to see how we can achieve this sooner, better than what others can do. Because largely we depend on these kind of exports. And it'll make us less competitive when, it's going to burden the importer on this kind of tax. So certainly the research is on way, and there are various alternative technologies which are being explored to see how we can get there sooner. Apart from this, also the tax as a social element of the ESG. We are trying to analyze and put things into the right perspective to say this is an overall ESG. So apart from the environment, we need to look at the entire picture as such. It's always been our initiative to, do the best kind of, to give back to the societies wherever we operate. So it's even before these terms have come into play that there has been a fair tax, which has always been our motto. So this will take us, already the ground is set, so perhaps this will help us do a little better than what otherwise we were supposed to do. So this is a one step up on that, yeah.
Fantastic, fantastic. I tell my indirect tax colleagues in the fraternity that who better than you know the free trade agreements around the world. There are around 352 free trade agreements, and as you see, India is signing a lot of them. Actually, the India-EU free trade agreement is having a roadblock because of this carbon tax. So how can we play a big role partnering with our business on supply chain solutions. So very, very interesting perspective, Indra. We have few minutes, maybe 2 or 3 questions for the panel. Yes, do you have a mic there? You can direct your question to one of the panel. Avoid asking me a question.
Just keep it short. Introduce yourself, please.
Hi, my name is Gaurav Khan. I am CFO for Shyam Spectra. It's part of the Shyam Group. And as a CFO, when my tax head knocks my door, my first query to him is, I hope it's not a new notice, right? So that's what keep on coming like weekly. If in a week I don't get notice, it's a surprise for me. So yeah, so my question is actually there are 2 questions, but the first part of it is we have spoken about when I talk about notices and you are talking about authorities are taking a lot of efforts on technology, being technology driven. But most of the time I have seen now that wrong notices are coming because they are using technology in a wrong manner, right? I have seen notices where a GST officer in a one state comparing my all India revenue and sending me notices that there is a mismatch in your revenue, right? So those types of, they have technology, but probably they still don't know how to use the technology. So that's my first question, that I don't know how we as a fraternity can help them or influence them to better use of the technology is one of my, I don't know, it's a question or it's a question mark and we don't know how to do it. Second part of my question is, we have talked about effective tax rate and we touched about a little bit about the compliance cost, because for us as a CFO, it's not about effective tax rate, but also compliance cost. And there are 2 complying costs. One is cost of doing things right and cost after not doing things right. And both comes under compliance cost, right? So for large companies, it's easy to spend money of doing things right. But for a medium and small time enterprises, sometimes it is okay to let not do things right, because as you rightly said, it will go to dispute, it will go further, and it will take a lot of time. And for us now it is easy. Authorities will ask question, respond to them, and then wait, because they don't have time to again recheck to those queries and responses. So, so my point is, the second part of my question is not about that, but we also talk about technology, we talk about tools, trust. These tools are right now either expensive or takes a lot of time for deployment, or people don't know which tool is right. How the small and medium-sized companies will able to adopt for those technologies, because for them it will again remain, मैं technology में क्यों invest करूँ, इससे अच्छा तो मैं बाद में देख लूँगा.
Got it. Yeah. I'll answer the first one. Anyone wants to take the second one? Small, medium-sized enterprise, how do you?
Okay. I will try and attempt it, but I don't know whether I can satisfy your question. It's a bit of an experiment. I'll be honest to tell you that it's a bit of an experiment. You need to be patient with it. You cannot solve in day 1 or day 2 what works for you or something. You have time and energy. A focus has to be invested into looking at what kind of technology works for you. Not everything works for you. You could actually start from something using even Excel-based macros. You know, many years back, almost 10 years back, when I had set up something for us in Honeywell, we actually set it up with Excel-based macros. My loads, 80% of the data churning or analysis was basis. So I would say be patient, be focused. If you lose the focus and patience, you will not go anywhere. Then you will again start with 0-1. So give a focus, attention to using something very basic and see what works to you. And as I said, your start and end is defined. You have to just walk on that path, and that is only through an experiment. At least I can say of my last 1 decade of experience.
Super. On the first one, Gaurav, what I would suggest is, I think we all need to do a bit of our own contribution to the tax authorities. You can easily reach out to them and say, hey, I can do this small technology course for the officers in the Nagpur Academy or wherever they have their academies there. And because if they learn it better, it's good for us, right? So that little contribution can go from everyone. Anyone can offer to the authorities that, hey, I have a great technology team. We can come and give you a small course on how to use X, Y, Z. Maybe probably will go a long way. And they will learn their own way, like we learned. One
just,
more?
Just one more question, 20 seconds.
20 seconds means 10 seconds for you and 10 seconds.
Yeah, sorry. This is Priyanka Agarwal. I am CFO of Nurturing Green Company. So my question is, if I talk about the new age startup, which has shot into the unicorn club quite faster than the traditional time frame which used to be for earlier companies, how the technology can pick up the unique offerings and complexity and help them in compliance and responsible reporting, as we can see a lot of busts are happening with the even the bigger unicorns because of they were not able to report properly, and this is maligning the trust in the overall market. So how can that be catered to?
This is very interesting, sir. Sanjay?
So unicorns, okay. Unicorns, how do they start, right? That's your question. I didn't.
Yeah, absolutely. I think.
So they'll have to start small. They don't need to use all the technologies, right? When the unicorns are actually going and getting bigger, they will not getting into pillar 1, pillar 2, CBCR. So they need to start with the basic technologies to adapt themselves and then go to the bigger ones. That's a very, very simple answer. I don't know whether you wanted that, but we can talk offline.
Yeah, we will. You have a comment? I have exactly 7 seconds.
One last question. My name is Krupal Kanakya. I'm the, so for me, I'm a mentor at CVB, which is a tax boutique tax firm, and also a director at Nexia International. The short question for all of y'all is, what is today the pressure in the organization for having the optimum tax rate or a net tax rate as a return of your on the return of investments amongst the investors? Is there a pressure today to deal with that, one? And second is there a pressure amongst your peers that this person's tax rate is better than ours? Why are we not?
Go for it.
I don't see there is any change in this kind of pressure to meet any ETR. It's just that Pillar 2 is asking you to look at your ETRs, but I really don't see any challenge in that. You continue to be doing your fair share, paying your fair share of taxes. This is the resultant figure. So I don't see any kind of modification to get to there. Yeah.
Perfect. I totally agree with her. So it's a two sides of the coin, right? One side of the coin is that it's a social contribution you need to pay. The other side of the coin is that tax is a cost like electricity, salary, etc. You need to optimize it. How do you balance and be a responsible taxpayer and get a good night's sleep is for all of us to take it forward. Big hand for the panel. I think you've been a great panel. Very good perspectives. Thank you so much.
Thank you, everyone.
Thank you.
Can you a quick photograph, please, Sanjay, the panel? A big hand, please. एक second. Just give us 30 seconds to rearrange the. Thanks once again, Indra Madam, Nisha, Qureshi Saab, Sanjay. Thanks for the wonderful panel.